Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and I'd first like to look at the euro against the dollar. Now here we have a third bearish black crow yesterday, a second consecutive close below the recent 50-cent Fibonacci line at 110.58, and still a continuation of the move following Monday's immediate countering bearish harami. We're now dipping into some support sub the 110 even area, specifically the 109.80 area where we saw dips back in November last year, and then the market retreating back up, so watch out. The next chart I'd like to offer is cable, aka sterling against the US dollar. A bearish double yesterday as the market once again took on the combination of the broken uptrend stroke neckline from November last year. That's currently at 130.06 and ended up closing right on it again. Today we're currently below this line, looking to test down to the previously tested September 2019 today uptrend. That's currently at 129.54 and just ahead of the significant and rising medium moving average, currently 128.97. Interestingly, we're also on for a possible weekly key reversal. If we close tomorrow over 132.05 or under 130.70, we'd be on. The third chart to look at is euro against sterling. A second bearish black crow and follow on from the previous bearish dark cloud cover pattern. However, because of its nature, it also looks a bit like an indecisive spinning top pattern as well. The top side was interestingly captured by the previously broken short stroke medium moving average, currently at 84.88, whilst the bottom was held up by the old broken echoing upper time, currently 84.22, of the bearish August to October 2019 bearish shift pitchfork, which still, as previously stated, echoes as support right now. If the market were to become even mildly bullish, then this area would be an ideal place to use as support for such an action. Today, steady so far. The next chart to look at is the US dollar against the Indian rupee. A bullish opening white Mariposa yesterday as the market moved back up towards this week's common attractor, the medium moving average, currently at 71.20. We spent the last couple of days exploring around this moving average, but seemingly more comfortable to go to bed close to it as a security blanket. Interestingly, we may end up with a weekly key reversal this week. If we close tomorrow over 71.60 or under 71.30, then we could be on. I say could because it is a tenuous looking one at best, though it did have a daily key reversal at the start of this week. As for the recent bearish looking bow tie formation, it seemed initially to look bullish, then indecisive, as previously mentioned. Well, that was echoed in the action during the recent kicking period. The final chart to look at is the US dollar against the Brazilian real. A bearish engulfing pattern yesterday, which complements the bearish harami on Monday and makes the small bullish white soldier on Tuesday the filling in the sandwich. The market interestingly closed back down below the broken upper time, currently 424.70, of the mildly bullish 2019 shift pitchfork. Below, we have the middle time, currently at 416.93, of the October 2019 to January 2020 very mildly bullish shift pitchfork, plus the short moving average nearby, which is currently at 420.67. That about wraps it up. So in the meantime, good trading.